Good morning, good afternoon, good evening on Thanksgiving Eve. How y'all doing? Glad for y'all to be here. Hopefully you watch this video for this week and you pick up some different nuggets from it. First and foremost, it's hot in here. This weather has been crazy, y'all. But other than that, I want to say, y'all, we done made it to the end of November. This been a long year. It's felt like it was October, November since January. All right, just been a roller coaster of a ride of emotions of a lot of stuff. We are now out of the 43-day government shutdown, and I am going to talk about the topic that I had posed for us. Somebody asked me a question, which was a very valid question. Hey, if the government shutdown had kept going on, what was going to happen? I don't know. Who knows? We was really going to be working with skeleton crews on a lot of stuff. And I'm grateful for the fact that that's not the case. However, we are not dead. We are not like swimming upstream yet, right? We not out of the water. Why? Because everything has been funded until January 31st. So we are being proactive. We are definitely, my team and I are getting stuff ready. So it's sitting there and ready to go. I'm assuming that the tax season will go without it will start on time. I'm not going to say there won't be no glitch. All right, because there's been some talks about continuing resolution. Like we've had stuff like that happen and IRS people still had to work, etc. I pray we just don't have anything as in dire straits as we did from September to the middle of October, to the middle of November. Get me right. Okay, to the middle of November. And so, therefore, only one who knows what's going on and how it's going to end up is God at this point, right? That's it. That's it. That's all. Because we can't see the future. We can plan for the future. And hopefully that is what everyone is doing, is getting their ducks in a row, getting things situated, realizing what their position is going to be moving forward, and really contemplating that, hey, ain't nothing counted for. Ain't nothing for show anywhere. Because these people will be tripping. They be out here tripping, period, point blank. But we're going to be in a position where we can move forward accordingly. Hopefully by now you've seen our new tax season guide. Let me know your feedback if you looked at it. If you didn't watch the video, I totally understand. It's long. But I would appreciate if you did watch the video, because there's information in it that may ask questions that people come back and ask me later on that we've already discussed and I've broken down where I wax deep. But I will tell you, that won't be the last time that you see that. We will send something back out in the beginning of January, just in case people forgot it, because we're going into the holiday season. So in the beginning of January, we'll send out a reminder, just like we have normally done for the last couple of years. But that tax season guide is sitting on both websites. It is sitting on Total Tax Experience. Right there is a link right there. And in the resource section on the Tax Cop website is that tax season guide for you to look at. If you got questions, reach out to us. It lays out how we operate, what our fees are going to be, how stuff is going to move, what category stuff are in, right? If you got questions, and hopefully that kind of clarifies if it works for you or not. If we are the firm that you want to work with, cool. If we not, cool. It's no bad blood. We still hope that you take this information and be able to absorb it. Now, this week, 2 weeks ago, before we did tax season guide, right? We talked about my queen to be, right? Because I feel like people need to understand that number on a tax return and why I feel like she is the most important. If you didn't watch that video, you didn't get that video, please go back, because I refer to the AGI, adjusted gross income, the queen, quite often. She set the tone for a lot of stuff, but then she got this cousin. That's what we're going to call her. We're going to call her the cousin that I don't talk about as much, but I want y'all to see what it is. So I told you we would be talking about modified adjusted gross income and what the IRS says that is. Let's jump into it. All right. So modified adjusted gross income, or it almost sounds like MAGA. Y'all don't get mad at me. It almost sounds like MAGA, but we're going to call it MAGI. That's what we're going to call it. I don't know how other people pronounce it, right? We gonna call her Maggie. Don't get her mixed up with MAGA. We gonna call her Maggie. All right. So Maggie adds certain amounts to your adjusted gross income. Why? That's why we're modifying it, right? MAGI determines if you qualify for certain government programs or tax benefits, credits, deductions, exclusions, right? And how much you can contribute to certain accounts, including retirement, investment, and health savings account, and how much of these contributions you can deduct on your return. This is how we get her to the point where we start phasing stuff out, right? And it determines whether you owe certain taxes like net investment income tax, which I said I was going to do a net investment income tax breakdown, that and additional Medicare tax breakdown, but healthcare as a whole stuff is crazy. All right, and I'll get to that point. How do you calculate modified adjusted gross income? You can use tax software or you can calculate it yourself. Now, y'all know we already did everything, added everything up, figured out what was going on, subtracted our adjustments, and did all those things to get to adjusted gross income. On a 1040, usually that's line 11. Okay, we figured out what this is. Now, this is what we're going to do. We're going to add or subtract items listed for a specific tax benefit, a credit or tax advantage account contribution you're requesting. We're going to add that amount to your AGI, form line 11, form 1040 line 11. I told y'all that, or subtract it if it happens to be negative. And then we're going to use that. We're going to use MAGI to see if you qualify for the specific benefit. So for instance, when people are doing stuff for certain credits, I'm trying to think, traditional IRAs, because those are income limit based, and your modified adjusted gross income got to be a certain spot. Deductions such as student loan and things of that nature, that will impact stuff as well. Those are the things that jump out at me right now, right? If you need to calculate MAGI for a different benefit, repeat steps 1 and 3 for that specific benefit. Now, y'all know I love the IRS website for one reason and one reason only. Let's make this a little bit bigger, not just for y'all eyes, but for mine, right? So I got it at 150. We're going to take it because I want y'all to see this example, because I like the fact that even in instructions, they give us examples. In publications, they give us examples. All right, so here's an example. Items required to take a specific credit contribute to an account or owe a tax total of $1,750. Your AGI, my queen, right? She is $40,000. We're going to add both amounts together to come up with what MAGI is, right? So now when we add them together, MAGI is $41,750. If you don't have your AGI, you can find it on your online account or by looking at your transcript. All right. What did I tell y'all? Y'all better use these tools. If you don't log into your online account, that's on you. That's step number 1 that I tell you when you come over here. Make sure you register for your online account. And if you can't get into it, then let me know so we can figure out the steps you need to, because you really want to get into that account. You want to know what these people know about you over at the IRNS. Okay? So if you don't remember, you can't get your hand on your tax return. Now, if you my client, you should know where your tax return is. But I do know if some people would be like, Patrice, I don't know where it is. Remember, your stuff is sitting in your portal for you to grab. Line 11. I need to get a t-shirt. Line 11 is the queen, right? Line 11 on your 1040 is the line you're paying attention to. And then we got to figure out if we can add certain things or subtract, because in some cases, it'll subtract stuff. All right? Items to add or subtract. Let's look at them. The specific items and how to calculate them depend on what MAGI is for, how we're using it, okay? So when it comes to these EVs and these clean vehicles and those credits, this is through September 30th, 2024, right? So this is the things. See, this is the child tax credit. Why? Because we got our range. If our range phases out, $400,000 if you marry, found, or jointly. $200,000 if you're single, right? Or if you're doing married, found, or separate, right? That's one. Here's another one. Education credits. This is where I was thinking a lot of times. We see this lifetime learning credit will phase us out. You got to know what those income amounts happen to be, so you can figure out if you fall into those ranges and if you're going to get it. Student loan interest deduction. That's the one I always think about. Why? Because I don't never get it. That's why. Student loan, I haven't gotten student loan interest deduction, knock you out really quickly, right? And this whole calculation, Coverdale, right? Education savings accounts. We're going to make sure y'all get this link. Premium tax credit. Now, this is for the healthcare stuff, and this is what's going on with, this is some of the arguments they're talking about right now. And I'm trying to be politically correct. This is what sent y'all home with no pay. This is when they're talking about this premium tax credit. It doesn't apply to everybody, but when they're talking about affordable health care and who gets it and what credit, this is the credit they're talking about. I want y'all to see my face. All right? So the premium tax credit. The other thing that I always think about is Roth and traditional IRA contributions. Why? Because traditional IRA, if you bust them income limits, you're not going to be able to get the deduction or you know what I'm saying, before contributed to the traditional. And so that's why you'll have people who do conversions into what we call a backdoor Roth, where they end up paying the tax. They take the money out. They end up paying the tax on the amount that they contributed. They put it in the traditional. They actually take a distribution from it. They pay the tax, and then they put it into a Roth, right? So they already paid the tax on it, and we don't want to double tax this. I've done it before, and sometimes the software catches it. Sometimes the software doesn't. So we got to be mindful of those, but you need to know your income limits. Why? Because you want to make sure you're not putting yourself in a situation where you're making contributions and you're not supposed to be making contributions. That's another discussion for it that we can go into more in depth if we need to. All right. And this is giving us 2024 information, not 2025 yet. Taxable Social Security or railroad retirements, because it depends on how much percentage of it is. Now, I've had somebody actually ask me this question recently, and I'm glad we're bringing it up because in 2024, the base amount was $25,000 or $32,000 if you were married. What's going to trigger the line item when we're going to start having to pay tax? And at what percentage? And in most cases, if you got some other income, it'll be 85%. And there's a whole worksheet for that. And that's what that is explaining. Adoption expenses. You can exclude adoption expenses. And I think we might have talked about this a couple of years back, but there's a phase out for this as well, right? Because adopting and getting the kids ready for going through all those legal proceedings, that stuff costs. But you got to be mindful, and we keep everybody within the right MAGI, right? So that we can make sure that we can take advantage of that, leveraging that credit. And then net investment income tax, which I said I would do a whole different breakdown of how did they calculate this one and the additional Medicare tax. These are stuff that come up and people are like, well, how do we get these calculation? What's triggering it? And now we know MAGI will determine whether or not if this is even going to show up on your return. And then we'll go into a breakout as to how we even get to what that calculation is and totally different discussion. Okay? That's what I got for you all. My biggest thing is making sure we give you these tools, right? And these resources. Why? Because they're helpful. They're helpful. They're coming directly from the source. If you're not certain as to what they are, y'all probably like, why is she playing with that screen like that? If you're not certain as to what they are, I understand. We want to give you the source. This page was last updated or revised on October 21st, 2025. We'd like you to go directly to the source, click around, get those links, get those questions together, look at the instructions, go to those certain publications, get an idea and get familiarized with those forms so that when you're looking at the worksheets in the back, if you're ever really studying a tax return that I break down, right? Because I won't lie to you, my focus is on the queen, right? But I know that MAGI come in and she kind of set the tone. This is why they work together. They cousins. They not cousins, they sisters. They're like twins to an extent, right? One is a little bit more developed or came out earlier. I don't know if that was the best analogy. We're going to go with that. Okay? But it's critical. And this is why line 11 on Form 1040 is the starting point for me. Because I'm like, okay, she going to determine, this is why I call her the phase out determiner. She going to determine what we're going to be able to get and what we're not going to be able to get. She going to be the start of our state tax return if we are in a state that we have to pay taxes. She's critical. And that's why I wanted to spend so much time on this number, because we are working on how adjusted gross income and modified adjusted gross income actually allow us to get to certain realms where we can actually take certain things. Stuff that was not discussed, of course, was like real estate and what makes it passive and how do we get the passive deduction and where we need to be. There's just so many. They just gave us a sample, right? They gave us a sample because these two work in tandem and they do have an impact on the tax return. And so I said that's what I was going to do. I'm going to break down the key critical numbers that come up that I pay attention to. We will spend time, because I don't know if I've ever broken them down in this depth. Next, we'll talk about the CANG, taxable income, right? But before that, we do have our monthly newsletter that comes out next week, right? Y'all, we had December, right? So we'll go through and we'll talk about, I'm trying to think about what we'll do for the rest of the weeks. Our offices will be closing December the 19th. We'll open back up like January 12th or so. But that doesn't mean we won't be coming in your email box. We're going to have you ready, right? And we're going to talk about these numbers. And if anything pressing comes out that I'm like, yo, y'all need to know because these people over here acting slam crazy or it's going to adjust, then we will break that out as well. There's questions that have come up that I'll end up talking about where we talked about, I've had clients ask me about interest on vehicles, how that's going to work, and some other things that ended up in the One Big Beautiful Bill. I'll see if I can slip them in here as well before we get back to us being live in an office. But I'll make sure that we'll be coming to your mailbox on a weekly basis so that even during your holiday season, you'll get some tips and information from us. All right? So until next week, we'll holler at you. Enjoy your family. And if you're not with your family for whatever reason, take the time to just pause and be grateful and thankful that you've got some time, some downtime. I pray that you don't have to do anything on Thursday and or Friday, so you can kind of just regroup going in. Get yourself a 4-day weekend and kind of ease yourself into some stuff. Don't press yourself out rushing to try to get some Black Friday deals if you don't have to. Now, y'all know for me, I be looking for, this is when a lot of my business expenses renew because I be trying to get them bundles that they give at that time. But other than that, if you ain't got it, don't press yourself out. It's okay. It is okay. And we gonna make it through to 2026 together, God willing. Enjoy your Thanksgiving. Enjoy your food. Enjoy your loved ones. Enjoy your peace of mind. If nothing else, go out for a walk and be grateful that you can move and you can breathe and that you made it through to another day. Until next week. Peace, y'all.